Welcome back to FundaTech Insights, the show where we break down the biggest stock stories so you don't have to stare at charts until your eyes glaze over. I'm your host, and today we're talking about Opendoor Technologies, ticker OPEN, a company whose stock chart looks like it's practicing for a roller coaster competition.
Hello, great to be here. And yes, Opendoor's volatility recently has been, let's call it cardio. If you hold this stock, congratulations, your heart rate is in excellent shape.
All right, let's kick it off. What is Opendoor, and why does it seem to be everywhere right now?
Opendoor is the big player in the iBuyer real estate model. They buy homes, fix them up, and flip them with a sprinkle of tech pixie dust. Think of it like Carvana, but for houses, except the houses usually don't arrive on a tow truck.
That's a relief. And their ticker is OPEN, which ironically is how your mouth might hang after watching the stock move 20% in a day.
Absolutely. Sector-wise, they sit at the intersection of tech and real estate, a tech-enabled home flipping machine, when things are going well.
Exciting! Let's talk numbers. Where's the stock sitting lately?
Recently trading around the mid-$6 range, but it's bouncing like it drank 3 espressos. Daily percentage changes, 10 to 25% swings are not rare.
So, not a set it and forget it investment. It's more like set it and watch it like a hawk that's had a bad morning.
Exactly. Market cap's been around $6 to $6.5 billion, and the volume is insane. Hundreds of millions of shares on active days. This thing trades like it's hosting a stock market block party.
What's been stirring the pot for Opendoor lately?
A few big things. Q3 earnings weren't pretty. Revenue around $915 million, down sharply year over year. Plus, a wider EBITDA loss. New leadership, Kaz Nijitin stepping in as CEO, and big names like Keith Rabeau returning. And of course, the retail crowd arrived. The so-called Open Army. When meme traders show up, you know volatility has entered the chat.
Ah, yes, the modern stock market Avengers.
And don't forget the proposed $39 million legal settlement for prior securities claims. Not fun, but it does help remove uncertainty.
Exciting! Let's get into the financials. Give us the short version before our listeners' eyes glaze over.
Sure. Here's the short version. Revenue almost $915 million in the latest quarter, but growth goes down 30% year over year. Profitability still in the red. Guidance, expect more losses near term as they work through restructuring and aim for profitability by 2026.
So basically, we're working on it. Please stay tuned.
Exactly. It's a turnaround story. Hopefully not one of those 12 seasons and still turning around situations.
Exciting! Chart nerds, gather round. What do you see?
Technically, 50-day moving average around 7.9 to 8.1. 200-day moving average much lower, around 3.3 to 3.3. Support around 6.57, then further down in the $3 to $5 range. Resistance $8 to $10, then up near the recent highs around $10 to $11.
So if this chart were a video game, those would be the boss levels.
Pretty much, and volatility is set to arcade mode.
What do the pros think? Wall Street cheering, booing, eating popcorn?
More like politely grimacing. Consensus rating is reduce, somewhere between hold and sell. The average price target is around $2.55, which is quite a bit below current levels.
Oof, that's like telling someone their car is worth less than their skateboard.
The gap is big because analysts are focused on fundamentals while retail traders aren't always.
Ah, yes, the fun part. How's the retail crowd treating this stock?
Retail is very active. Think Reddit threads bursting with rocket emojis. Short interest has been high, 20 to 22% of the float at times, which feeds the whole squeeze narrative.
So it's basically gasoline plus matches.
Yep, with enough volume to blow towards the eyebrows off anyone shorting it at the wrong time.
All right, bring it home. What's the big takeaway?
Opendoor today is a mix of turnaround fundamentals, leadership shakeups, meme-powered momentum, and serious volatility. Bulls see a comeback story, bears see a business still fighting gravity, traders see a playground.
Beautifully said. Like poetry, if poetry stressed me out.
That's the stock market for you.
All right, that's all for today's episode of FundaTech Insights. Remember, folks, this isn't financial advice, just mildly entertaining market therapy. Catch us in the next episode when Maddie explains about next stock. Till then, take care of yourself, bye-bye, and keep investing.